All right, welcome back, guys. Today is Thursday, June 2nd. It's about 10 in the morning. Got a lot of questions about this 4-hour level that we've got in the equity markets. That the Dow and the Russell and the ES almost came into. Nasdaq didn't quite hit it. But the question was, how do I know which one to take? And so I'm going to kind of go through that with you guys, okay? So this is a 4-hour chart of the Dow, and we had this drop base rally marked out on the Dow, and you can see that it hit our level right to the tick before we started to rally. We're kind of retesting that level right now. But the question was, which level would I have taken when I look at this? So I want to look at all of these together, and then I want to show you a chart that I look at when I'm comparing the equity indices and deciding which one I would prefer to take. So let's look at the Russell. This is a 4-hour chart of the Russell. Okay, so the drop base rally. I didn't draw these like perfectly to scale, guys. Just bear with me here. If I look at the Nasdaq, same 4-hour level, didn't get down to it. Okay. All of these are 4-hour charts that I'm looking at. If I look at the S&P, came pretty close to our area, right? And it bounced, and now it's retracing again. So all the equity markets are basically doing the same thing, but the Dow was the one that actually came into the level and would have worked on this trade. Now, the question is why, all right? So this level came in 9 o'clock in the morning. All right. So what I have here is I'm going to show you guys a flexible grid chart, which basically compares all of the equity indices across a specific time frame. All right. So what I'm going to do is I'm going to go back to Wednesday at 9 o'clock, and we're going to talk about which one was the leader of the day. And so this is, let me see, where are we at? This was yesterday at 9 o'clock. Okay, right here. You can see the timestamp down here. You can see this right here. And the Nasdaq was the leader of the day, but that didn't come into a level. Right? So 9 o'clock. But what I can see is that the Dow, which is this purple line, I'm sorry, the Nasdaq eventually ended up being the leader, but at 9 o'clock in the morning, when our level was hit, the Dow was actually leading the pack right here, right? 8:55, 9 o'clock, you can see that down here. And so if I'm looking at a 4-hour level as an opportunity, I want to trade strength. And so I would have been a buyer on the Dow. All right. And fortunately, for those inside of trading price that know about how to use this percent change chart and how to use this when navigating the equity indices, that's exactly what we would have done. Because when I go back to the charts, the Dow was the one that came right smack dab into our level. So the close on this candle was 3255, and the low on this candle was 3256. So maybe you would have had to jump it by about 10 ticks to be able to get into this chart, but we use these percent change charts to determine which area we can get the most odds at for our favor if we're going to be trading the equity indices on the same level. So guys, that's just a little snapshot, teachable moment here on how we use the percent change chart inside of equity index 4-hour levels. When we approach a level, we want to buy strength. We want to sell weakness. So that's exactly what happened here. Again, on the flexible grid, the Sorry, it's updating because we're live right now. The Dow was the leader at the moment when price came into the level, and that would be the one that you would want to buy is the strength of the market, and you would have caught I don't know, what is that, 400 points T1, and we were above 40 on the RSI, so this is absolutely a viable trade. Didn't quite hit our 889 rules, but this would absolutely been a viable trade, and almost immediately you would have came up pretty close to T1, so would have been a really, really nice trade. But when you're trading the Nasdaq, the S&P, the Russell, or the Dow, and you're looking at time frame levels that are good, high quality levels that create new highs, that have a lot of strength coming out of them, that are fresh, that breach previous areas, all of those things combined, we want to use percent change charts, and that would be the reason why I would have traded the Dow as opposed to perhaps missing out on a level, like some of us did on the S&P, or even worse, getting stopped out perhaps on the Russell. And there's a reason why we didn't take this on the Russell, and we would have taken on the Dow, because the Dow was the leader of the day. All right. And depending on where you put your stop, you could have got stopped out here only to see price go your way, which happens to so many traders. So using that percent change chart can help you alleviate some of that pain. But guys, with that, that is today's teachable moment. Hope you have a great rest of your day. Hope you make it profitable. And as always, guys, check us out at tradingprice.com. Check us out on Facebook. Follow us on YouTube for more teachable moments like this. And with that, guys, take it easy.